Your bookkeeper sends you last month's profit and loss statement and you think, oh, maybe I should open this. But then you do, and it kind of feels like a spreadsheet just slapped you in the face. You're not really sure what you're looking at, and you're really not sure what you're supposed to do with it. So you close it and hope you magically know what to do with it next month. If that sounds familiar, you are absolutely not alone. Most designers I talk to have felt that exact same way. You're told you need to know your numbers, but nobody really explains what to look for or how to use those numbers to actually help your business. The thing is that your bank balance doesn't tell the whole story. You can have plenty of cash and still not be profitable, or you can feel broke but actually be doing pretty well. That's why your profit and loss matters. It's not just for your accountant at tax time. It's one of the most powerful tools you have as a business owner. I'm Holly Skog, owner of Happy Book Solutions, where we demystify the finance side of your interior design business. This video is the first in what I believe will be a 5-part series on the financial reports every interior designer should know. Today, we're starting with the P&L, what it is, why we recommend reading it on an accrual basis, and what to check each month so you actually use it to make better business decisions instead of just crossing your fingers every month. If financial reports have ever felt intimidating to you, don't worry. We are breaking it down step by step today. And if you'd love a simple checklist to help you actually use your P&L each month, I've got you. There's a free download linked in the description below that walks through exactly what to review step by step, and you can do it in probably less than 15 minutes. So first up, what even is a profit and loss statement? Think of it like your business's monthly report card. Did you pass? Did you fail? Did you totally crush it? It shows 3 key things: how much money came in, how much money went out, and what was left over. Your P&L is made up of 5 main sections. Revenue, which is money from client invoices. Cost of goods sold, otherwise known as COGS, which is what you spent directly on things that were resold or billed to the client, such as furniture or subcontractor labor. Gross profit, which is the amount of revenue left over after covering COGS. So the calculation here is revenue minus COGS equals gross profit. Operating expenses, which are all the behind the scenes things that help you run your business. Rent, website, insurance, software, etc. And then finally, there's net profit, which is also called your bottom line. This is the amount you actually made after all COGS and operating expenses are taken out of your revenue. The P&L helps answer the question, did I actually make money last month? And here's where I want to make something super clear because it can be really confusing. And a lot of designers miss this, honestly. Your P&L is not a description of your cash flow. In other words, just because your P&L says you made $10,000 last month doesn't mean there's $10,000 sitting in your bank account. But for now, just keep in mind that the P&L tells you how your business performed, not how actual cash moved. One thing I want to note about your P&L before we get into what to look for is that there are 2 different ways you can look at your P&L, cash basis or accrual basis. And yes, it does matter. To be clear, today we are just talking about gaining operational insights from your financials. So just to reiterate, this is not tax advice, this is operational advice. What we're talking about here is how you, the business owner, can get clearer insight, not how to file your taxes. With that disclaimer in mind, let's chat basis. Cash basis shows income when it hits your bank account and expenses when they leave. It follows the money, which can feel intuitive, but it doesn't always show the full picture. Accrual basis shows income when it's earned and expenses when they're incurred, even if the actual money hasn't moved yet. This matches your revenue and expenses to the time period when the work actually happened. For example, say you invoice a client $10K in February, but they don't pay you until April. Under accrual basis, that revenue still shows in February because that's when you did the work. Under cash basis, the revenue would show up in April. Similarly, if a contractor bills you in February, that's when the expense would be recorded under accrual, even if you didn't pay until later. And again, under cash basis, the expense would be recorded when you actually paid the bill. Here's why accrual basis is so helpful. First, it tells the story of your business activity in real time. The revenue is reflective of the work you actually did in a given month, and expenses are reflective of the purchases you actually committed to in that same month. Second, because of this, it helps you see true profitability in a given month. And third, it prevents weird mismatches such as showing a gigantic profit in one month just because a few big payments happen to come through, even if that work was done months ago. So in short, accrual shows the story, cash shows the receipt. And again, your P&L is different from your cash flow statement, which we will cover later in the series. That report shows actual cash in and out. Think of the P&L like a performance scorecard, while the cash flow statement is like a bank account diary. Now that we've established what the P&L is, let's talk about what you should actually look for when you review it. This doesn't need to be a big old thing. A quick check-in is totally okay, especially if you're looking at it on a month-to-month basis. Here are 5 things I want you to look at every time you get your P&L. Revenue trends is the first one. Is income going up or down? Is it steady? Are you seeing more product sales or more service fees this month? This can be a good time to evaluate your revenue categories on your chart of accounts. Are they too general to be helpful, or are they so specific you're getting caught in the weeds? We usually recommend maintaining 4 main revenue categories for designers: sales of product income, design fee income, labor install and repair income, and shipping, freight, and delivery income. We find these categories to generally strike the right balance between being helpful but not too specific. But of course, you can do whatever works best for you. A really helpful thing you can do is take your gross profit and divide it by your revenue to arrive at your gross margin percentage. This is helpful because the amounts you're invoicing your clients each month are going to vary. So seeing your gross profit as a percentage rather than a straight up dollar amount helps you compare month over month. The higher the percentage, the more revenue you are keeping after accounting for COGS. So what I would do is compare that percentage month over month. A couple of the things that can affect your gross margin would first be markup. So the higher the markup, the higher your gross margin percentage, and also product mix. So if one month you billed $20,000 of design fees and did all the design work yourself, meaning you didn't pay anybody for any of the design work, then you could feasibly have a gross margin of 100%. Whereas if you sold $20,000 of products, then you're gonna have costs associated with that, which means a lower gross margin. Margins tell you how efficient your business is at making money, not just how much you made, but how well you kept it. This is where it can be helpful to have COGS categories that match your revenue categories. So you can compare gross margin by category to make sure you are profitable on each of the categories you're selling. So just like our revenue categories, we generally recommend maintaining the following 4 COGS accounts: COGS products, COGS design subcontractors, COGS labor install and repair, and COGS shipping, freight, and delivery. But again, you can set it up in whatever way you'd like. The third thing to look at is operating expenses. Are there any expenses creeping up? Are there any tools or subscriptions you forgot you were paying for? Anything you feel like you have room to add or would maybe like to get rid of? The fourth thing is net profit. How much did you actually keep at the end of the day? Does it feel worth all the work you put in? This is another good time to take your net profit dollar amount and divide it by your revenue to arrive at a percentage. What proportion of your revenue are you keeping month after month? What are the trends? And then the last thing to look at is just for anything that looks off. Are there big spikes, unexpected drops, something that doesn't feel right? Follow that instinct and dig into the details. I know this feels like a lot, but this check can literally take 15 minutes once you get the hang of it. One thing I want to add here is that I always have designers ask me what their gross margin percentage should be or how much net profit they should be targeting. And the reality is that I can't answer that for you without doing some significant analysis. The answer I always give is that it depends on your goals. Your ideal net profit is going to be different than that other designer's ideal net profit because you guys have different goals and are at different stages in your business. Maybe you're a residential designer and your focus is on identifying a studio space to rent and building up inventory, while your friend is a restaurant designer and is currently focusing on hiring a team so she can cut back the hours she's spending in her business. Each of these situations is going to have a significantly different set of financial targets. While there is a set of financial targets that would be good for you to shoot for, it's going to be very specific to you and your goals. There's never going to be a one-size-fits-all. This is why we at Happy Book Solutions offer advisory or CFO services, because it can get pretty complicated to identify what those targets should be for your business. With all that said, following the check-in steps we just talked about can help you identify patterns and give you a really good start yourself on understanding your business's financial picture without having to consult with a professional. Okay, so let's quickly touch on a few mistakes I see designers make all the time when it comes to reviewing their profitability. First, a lot of designers just look at their bank account, see there's money in there, and assume they're profitable. But now that you watched this video, hopefully you know that your profit and your bank account activity are not the same thing. And if you've made it this far in this video and you don't know that, I'd suggest starting from the beginning. Second, so many designers have access to their P&L and just don't look at it. Sure, you have a trustworthy bookkeeper, but it's so much deeper than just having your books done. You're foregoing the valuable insights that come along with the business scorecard that is your P&L. It's the difference between making decisions just with your fingers crossed versus making decisions based on actual data. I feel like I know which one I'd rather do. Lastly, a lot of designers will just look at their bottom line to see how much profit or loss they've had and not dig any further. The beauty of your P&L is that it helps you understand why your profit is the way it is, so that if you had a great month, you can try to replicate the things that went right, or if you had a bad month, you can see what went wrong and try to avoid those mistakes in the future. Even just a quick monthly or quarterly check-in can help you catch problems early and feel way more confident. So that's your profit and loss statement. It's not so scary, right? So 5 sections, 5 quick things to review, and a whole lot of insight packed into one report. Remember, your P&L doesn't just tell you if you made money, it tells you why. And when you understand the why, you can make smarter, more confident business decisions every single month. And don't forget about that free monthly P&L review checklist I linked in the description. Print it out, fill it out, start building a financial habit that feels doable. The next report we'll cover in the series is your balance sheet. Most designers skip it, but it has some seriously helpful information when you know what to look for. So be sure to subscribe if you want to keep learning. And if any of this was helpful, let me know in the comments. What's one thing that has always confused you about your P&L? I'd love to hear it. Thanks for watching, and until next time, here's to happy books.